Alright, so today we are going to do control account. Okay, so basically I have already listed the information over here and I have made the simple account the heading of the ledger. Okay, I hope you are familiar with that. So basically control account is separated into ledger and purchase ledger. Okay, so we will call this one sales control account, and this one we will call as purchase control account. Okay, alright, so anyways, so moving on to sales ledger. Sales control account is a process of checking arithmetical accuracy of the sales ledger, and opposite go with the purchase ledger. So what it does is that sales ledger control account will have all the trade receivables, okay, and purchase control account will have all the trade payables. Okay, so we can say sales control account is the total of trade receivable. Okay, so sales control account is the total of trade receivables. So if we have 10 trade receivables and for each the balance is 10, so sales control account will have a balance of 100. All right, I hope that's easy, but to be precise you can say that it includes, when I say it includes it, I am referring to sales control account. Okay, it includes credit sales, and we have sales return, then we will have discount allowed to the trade receivables, then also we will have bad debts. All right, okay, and we will have almost the same thing excluding the bad debts in here because we don't have bad debts for purchase. So now here purchase control account includes all the credit purchases. Let me highlight on that, okay, because the credit word is very important, because if we see the sales ledger account, the trade receivable will only include the payments or the sales which are on credit, right? That's why it specifically I am highlighting, emphasizing on credit more. So let me make it bold and let me continue credit purchases, and we have purchase return. What else can we have? We can also have discount receipt, which is an income and which will be on credit side. And yeah, so basically I hope so far it's clear. When we will get some examples of that, then I hope it will be more clear. So basically, jumping into the benefits of control account, it helps to prevent the fraud. It helps you to check the total of the trial balance when we are posting the entries, and it also provides us the total information that we should post for trade payables and trade receivables for trial balance. Okay, so I have made some of my own examples here, and let me copy this thing because I will need a couple of accounts over here. I'm just copy pasting. Okay, so I have copied the format this account, so I will write the name of the account I am going to post the entry. So in this I won't be making cash book, I won't be making the other account, I will be just making the trade payable account, and I will be making the trade payable, and it will be purchase control account. Okay, so I won't be making the opposite account. So if in this case it's going into cash book, so I won't be making cash book in this video. All right, so but I hope it will be clear. So moving on with the first entry, I think we can give them some number so it's clear. Okay, if we bought goods on credit for 4,000 from Rafiq, so I have to open the account with the name of Rafiq. That is what usually we do. Okay, and what we will be doing is, in this case I don't have date, so I don't have to worry about the date also. So okay, so this is purchase will be debit and Rafiq will be credit, and I don't have any date. I will write purchase here. I am not making purchase account as I mentioned earlier, because I am just explaining what is purchase control account, and I am only emphasizing on trade payables. Okay, so this will be 4,000. Then I bought the goods on credit. I bought the goods on cash from John. I won't be making an account for John because this is on cash. Okay, so if we have purchase on cash, we will debit purchase and credit our bank. Okay, it has to do nothing with the John account. So moving on with the payments, made all the payments to trade payable with 5% trade discount. That means we made the payment, so it's mean credit bank and debit Rafiq, right? So it will be cash book, or maybe if you want to be more specific from cash or bank, that's fine. And that is going to be 4,000, right? No, wrong. It's going to be 3,800, 3,008. Okay, and we are going to calculate the 5% of this total. Okay, and then that is 200 I have mentioned, so we will take the 5% of 4,000 and that will be 200. This is discount received. Okay, so this will be discount received. I will just write the short form 200. So we will debit our trade payable and credit our discount received. Why credit discount received? Because it's an income, that is why it's credit in the discount received ledger. Okay, but in this case I am not having trade the discount received ledger. So moving on with this amount, I have to minus 4,000 and minus the trade discount, and this is the amount I really paid. And then moving on with the next transaction, I bought the goods on credit from for 6,000 from Jack, so it's me. I'm going to open an account with the name of Jack. Okay, I can just write Jack account, but I'm not writing it, just trying to make things more precise. So it's 6,000, so it's mean again it's going to be purchase. This will be 6,000 and we don't have any date. Okay, what happened? We bought the goods on cash 1,500 from Robin. What happens? Debit our purchase and credit cash. Okay, purchase return from Jack, so it's mean we will have a purchase return account, but in this video I'm not having purchase account. I'm just focusing on trade payables. Okay, so it's mean credit will be purchase return and debit will be Jack, that is 500 in this case, and I am going to write here purchase return. Okay, if you are not clear and if you want me to make a full video on with the double entry account, if you want me to have include purchase account and purchase return account, then maybe you can comment down in the video and we can consider it, okay, another time. So basically moving on with the transaction, made all the payments through the trade payable. So for this case we already cleared Rafiq previously. Okay, and then now we are going to make the payments through trade payable, and that is going to be our cash book. You can specify cash or bank, and then the amount is going to be 5,500. Why 5,500? Because there is 5,000 already purchase return, right? I haven't considered any bad debts, but okay, this is purchase. So maybe when we are doing sales account we can consider some bad debts also. But for this, now I'm going to have purchase control account. I hope it will give more clear understanding of what control account is really about. Okay, so this will have purchase, and then we have purchase on this side. So what we can do is we can write down here purchase. Okay, or maybe we can maybe we can have payments also. So let's see, we have payments. Okay, maybe we can classify payments for cash flow more specifically. Okay, so we have purchase here. In this case we have 4,000 and 6,000. We have 10,000, and then we have payments, and that will be 3,800 and 5,005, and that will be, give me a second, let me calculate that. 5,500 plus 3,800 will be 9,300. Okay, so 9,300 we have payments, and then no date in this case, and then we have discount receive. In this case we don't have any discount receive. Okay, so this is only 200, because the reason it's 200 is because we don't have any discount receive in this case. Okay, I'm just going to add another line. Okay, and then I will have purchase return here. Purchase return will have how much? 500. In this case we have no purchase return. Alright, so if you want to specify this one, maybe you can write credit sales, credit purchase, and then I will leave one line. Okay, I will total it up, and I will total this side, and this is balance. Okay, this is balance, and this is also balance. Okay, it's not necessary this account have to be balanced. Okay, so in this case I will have no like trade payable like balance brought down and carried down. Okay, so it's mean no transaction will be posted into my balance sheet. Okay, so if I have trade, let's say I did not pay this amount. Okay, okay, let me give a second, give me. Okay, so if I did not pay this amount, can I cancel this column? Maybe I can just add one column. Okay, so what will happen? I will have balance brought down of 3,800, and then total will be 4,000. Here also total will be 4,000, and then I will have a balance brought down of 3,800 again, right? So sorry, this is balance carry down, and this will be balance brought down. So this is total. Let me highlight this, and this will be the situation. So in this case and in this case also, let's say we are having balance brought down, so we will have 3,007 5,500. Okay, and the total will be 6,000, and in this case also the total will be 6,000, and the balance brought down is 5,500. So I am going to highlight these two amounts because this is the total, so it's more clear. Okay, so now better, I guess. Alright, so in this case I will not have any payments. In this case also I will write down balance carried down, and balance carried down is supposed to be down, so I will drag it down over here, and I will pull these two amounts upside. Okay, maybe I can pull this one also up. So what will happen is I will have a balance brought down of 9,300. So basically what happened is that if you have all the trade payables, in this case these two are trade payables, right? So I just gave you examples of two trade payables. We can have more trade payables, we can have 20 or maybe 30 trade payables. So what we will do is we will add all the purchases of all the trade payables, and we will list here how much is the total of all trade payables that on the purchase column. Then we will add all the purchase return. So if I have purchase return here also, I will add the purchase return on this column, but in this case I don't have, so I didn't add up, I just did as it was. And then for trade receivable also we will do the same thing, like all the sections that are included in an account, we will do the same thing. And this is something purchase control account, and sales control account is also similar. We are going to do the same thing with purchase control account. So it's been, let's move on. I hope that's clear so far. If you have any questions so far, you can list down in the comments. So in this case we sold the goods on credit to Alex. Okay, so I am just going to make the account for Alex. I'm not going to open an account with the name of sales. So this is my trade receivable, that's mean I am going to write it on debit side, sales will be credit, and the description will be sales. Okay, and then I will have cash sales. So cash sale will directly go into cash book and sales. Okay, sales will be credit and cash book will be debit. Received the cash from the trade receivable, 2% trade discount. So the thing is my mistake that I did not calculate the 2% of 7,500. So 7,500 times, okay, times 0.02, and it will be equal to 7,000.02 will be 150. All right, again I have to mention here, I have to minus 7,500 minus 150. 7350. So this will be the amount I will be paying, and this is the discount I will be giving. So this is a discount received. No, this is not discount received, this is discount allowed. All right, so this Alex, okay, he's making the payments, so it's me, I'm receiving, he will be credit, and that will be cash book, and the total will be 7,500, right? No, wrong, it will be 7,350, and it will be discount allowed 150. And then we have, I will also have discount allowed column account. Okay, but in this case I'm not having, because again I mentioned I'm trying to make things as precise as possible. So let's move on with the Smiths. Sold the goods on credit to Smith for $7,500. I'm going to open an account with the name of Smith. He is my trade receivable. I sold the goods to him, so sales will be credit and he will be debit. Why I sold it, it will be sales. All right, so this is also 7,500. Okay, let's change the amount. Let me change the amount here so you don't get confused. So we have a couple of different examples. So cash sales, we have again cash sales. We will not be posting it. I hope I don't have to explain it again. Sales return for Smith. Sales return is 300, and received all the payments, and he paid all the payments. That will be cash book or cash, anything you want to write depending on what account you are having. Okay, and the balance will be 6,200, I guess. Yeah, so just let me total up the amount. very quickly. Let's add one column here so it's easier to demonstrate things. Okay, now I added the wrong column. Okay, so now I'm going to have sales control account. Okay, and what happened in this is also something similar to what happened into purchase. So all my trade receivable, I will take all the total of trade receivables and I will combine them. So credit sales, let me specify this is credit sales. Okay, I'll take the credit sales and total this 7,500 plus 6,500, and that will be, let me calculate that, that will be 14,000. all right. Oh, oops. All right, that will be 14,000, and then we have sales return. Okay, do we have sales return here? We don't have any sales return here. Yes, we have only one, so it's mean we will just write 300, which is one. So do we have any cash book here? Yes, we have. Do we have any cash book here? Yes, we have. So we have to add this cash book amount and we have to add this cash book amount. So we can write here cash book, or we can write here receipt maybe. And then this will be 7,350 plus 6,200 is 13,550. okay, and then we have sales return. We already written sales return. We have discount allowed. Okay, discount allowed is 150. I'm just going to write 150 first, and then I'm going to write, and I can just copy paste. Let's save some time. All right, here I will have the total. I'm leaving one line because I have to give the example of what happens if we have trade balance brought down and balance carried down. It's not 14,000. Let me confirm it. Is it? Yes, it is 14,000. okay, so this is what's supposed to happen if you don't have any error. Okay, if you don't have error of omission, if you don't have error of commission, then you will get something similar to what you have here. So in this case, both of your total balances, it means you don't have any balance carried down and brought down, and this is something you are going to get in the sales control account also. So this is a small video of what sales control account is. In next video I will be explaining what are the exceptional things that can be included in sales account and how we are going to manage them and post them.